Hey guys, please take the time to review as well as understand this disclaimer I'm going to give you. My name is Dantes Lindsay. I am the General Manager of Ducks Trading LLC, as well as the lead trainer of StockCraft. I'm not a financial advisor, nor a CPA, and the content I create is for entertainment and educational purposes only. I trade in my account, and everything I do is hypothetical in nature because it doesn't happen in your account. My experience with trading is not typical, nor does it guarantee that similar results will be obtained by you. I am merely sharing my opinion with no guarantee of gains or losses in investments. Remember, day trading can be extremely risky. You should be prepared to lose all the funds that you use for day trading. In particular, you should not fund day trading activities with retirement savings, student loans, second mortgages, emergency funds, funds set aside for purposes such as education or home ownership, or funds required to meet your living expenses. Further, certain evidence indicates that investments less than $50,000 will significantly impair the ability of a day trader to make a profit. Of course, an investment of $50,000 or more will no way guarantee a success. Please take the time to review as well as understand this disclaimer for your safety as well as mine. With that out of the way, let's get into the content. I'm going to go over a few of the questions that I've been receiving pretty regularly in Finviz, and how do I approach Finviz, and like, could you give me some tips and tricks and stuff about it, or how do you use it, Dantes? And so I'm just going to do a very light video on how I like to use Finviz and how it can be applied to you in pieces that you can probably apply to your own scanners and filters and screeners. Yeah, so that's going to be the topic of the day. There's really no direction. It's just me showing you how I use Finviz. So let's get into it. First thing I want to do is we're going to go into the StockCraft scanner. All right, here in the scanner, you see the top play right now. As I'm waiting for the Fed meeting where they're going to give me an announcement on hikes and other news, I thought I'd throw in this video where most recent question that we got was the Finviz question. And so I thought about it. When I first look at a stock, I'll look at it on a screener and I'm just like, okay, what's popular? I look to my watch list and I'm like, okay, these are the tickers that I'm looking for a back end because there's a resistance that was created somewhere and I want it to like come back up. There's nothing like that today. On these days where there's pretty much nothing in the morning, and then there's random tickers popping up like in the midday as well as like late afternoon. Those are tickers that like I normally don't use Finviz for. Mostly because I use Finviz to get the starting statistics, because that's something that's more consistent. And if you get something like towards the end of the day or the middle of the day, you're going to get not the starting statistics, but you will be able to use those statistics for the next day if there's a setup for another play. So this KC, with this KC, it's at 70% right now, and it's only 1 o'clock Eastern time. And so with this 70%, you see this is a Chinese stock to where this is a second green day and it's on a downtrending chart. The reason I put this up here is because this could be a sign of the reversal, and you don't really know that yet. All you really do know is that this is a stock that's up 70% on at least intraday. And then when you go to the daily, you can see it's actually up from $2.50 all the way up to $6. And so, you know, that's something I'm actually like looking for, because 100% will put you at $5, and then going up to 6 puts you at like 110, 115. This might turn into a multi-day runner. This might turn into something else. But first we got to figure out the catalyst. And so that's where Finviz comes in, because remember, I normally use it for starting statistics, which is really good when you're looking at it in the morning. But in the afternoon, you can look for statistics and news and other stuff around Finviz to see which way is the wind blowing. And so you can actually make an accurate decision to back the information that you got from Finviz. And so I'll show you what I mean. So we saw that KC was the ticker. So if we go into the search bar, put in KC, we see King Soft Cloud Holding comes up on Finviz. So the first thing I see is they give me a daily chart, and I'm like, okay, cool. I appreciate that. This is free. I see this is NASDAQ right here, and I'm like, okay, I like NASDAQ. That's the sector, or that's the exchange like I'm most familiar with. I like the restrictions, all the rules, and I'm all about it. I see this is a part of the technology sector. Okay, first thing I'm thinking, oh, that's a very volatile sector. That's something that like I would like to be a part of. Okay, this is a part of China. This is the sub industry. Okay, this is the name. Okay, what else can I look at? All right, so I got, this is the market cap right now. It's after it's 70% plus the previous percentage inflated. And so we're probably looking at actually like something closer to like 300 or 400 for like starting market cap. If we really wanted to know, we can go to the SEC filing and other stuff like that. But main thing is we look at the stuff that doesn't change. Like, okay, what does the average volume look like? What's the current volume? What's the float look like? Because remember, when I'm in Finviz, I only want those starting statistics on that shares float and market cap. Everything else is more of just a few more details to help you set up some lines to see which way the wind's blowing. And so that's just for this specific ticker. Now we have all that extra information of like the subsector, the overall sector, the country, and the exchange. Now we can kind of piece it all together. Now remember, this is under $1 billion, and it's 100 million float. With that, let's go to the groups. We come up here to the groups, and we'll see on the daily, one of the top sectors right now is technology. So we have the wind on our back, and we also saw that this is up 70%. So we kind of guessed that already. Now, if we go into technology, you see it brings up all these charts. These are all the technology charts, all of them. We go over to overview. It starts to separate them in the columns, and you can control these columns up here. And so one of the things we saw before was this is a technology, and we saw its subsector, which was software. Now, we also saw it's from China. So before we even get into that, let's just see what's popular in the technology sector itself. And so we can do that in two ways. One, you go up the volume. You click it, and it's going to order it from top to bottom or bottom to top. I like to do top to bottom. So at the top, you'll see in the technology sector, it's actually a Chinese company. And you're like, oh, okay. But it's only up 41%. The thing we saw before was up 71%. Wait, there it is. Now with that, we can see that this 71%, it's pretty high up there. All right, so when we look at this, we saw volumes from top to down, or top to bottom. And with that, you can see there's a chance that the top volume could be the one with the top percentage. But in this case, the one with 42% is not the one we saw earlier. But it's still a Chinese stock. And so that's something in common with the one that was originally 70, now it's 69. And so with that in mind, you're just like, huh, you got two Chinese stocks in the top 3 when you order it by volume. Huh, is that a coincidence? Well, probably. Everything else is like US. I'm like, okay, well, let's try to make sure. So we go to buy changes, and we order everything by its change. We're just like, oh, wow. All of them have China in there. So there's something in common within the technology sector. Because remember, we're in the technology sector. And then you're thinking, okay, well, these companies are probably too small to actually have an influence. And they're probably just piggybacking off of the hype of the entire sector. Like, is that true? Like, let's order it by market cap. Because the ones up here, they're in the millions, and a few are billions. So now we see the ones with the highest market caps. None of them are here. Okay, so you don't see a single one from China in the top 20 when you order by the top to bottom market caps. Okay, well, let's try to do a case study then. If we know it's mostly from China, let's see what China's up to. So we order the entire sheet in terms of China, and then we're just like, okay, let's order by volume now, because everything's filtered by China and it's filtered by the technology. So with that in mind, we see top 6. They all have a decent percentage, and the volume is it's not consistent. Like some are in the low tens or low double digits. You have one in the triple digits, but it has a low percentage. And so you're just like, why is that? And then you look over, you'll see, okay, the ones with the $1 billion market caps, those are the one with the large volume but low percentage. But the ones with millions has a high percentage compared to its volume. And so with that, you can kind of paint a picture of what's going on. Something's happening with the Chinese small caps. And then technology sector and healthcare sector and a few other things like that, they're usually the first to get hit with types of rumors. And so let's go back to the ticker that we had before. But actually, I'll take that back. Before we do that, let's compare China stocks on other tickers or other sectors. So if we do consumer cyclicals, because it's still the top of the day, you will see there's a lot of volume. They're all $1 billion caps, and the percentages are stable. Now we take off the country and we put in any country and see where does it line up compared to the other ones when we do volume and change. Now you'll see out of the top 6, top 6, 4 are from China. That's just with order by volume. Order by change, top 10, 8 are China. And so this gives me thinking a little bit that something's going on with China right now, and it's mostly positive. And remember, the US is just the reserve currency for the world. So when we go up, other people go up. When we go down, other people are going down. But China's going up right now. And then we're going up a little bit on SPY. And so with that in mind, we're just trying to figure things out. So on that note, let's refresh this. See if there's any change in the groups. No, it still is solid. And so we know China's leading something right now. And so one of the things we can do is go back to the ticker that originally put us on this idea and go to the bottom and see what kind of news did they just receive. So the most recent one was yesterday. Okay. And so this article pretty much tells us that a very credible person or industry or company, whatever JP Morgan or whatever you want to call it, they made a comment on Chinese stocks, and then that affected the way people viewed the stocks. And the way news travels, it's usually like 3 days. It's pretty slow. They put Chinese stocks in a bad light, and that was 3 days ago. And so most people are assuming that the news is already over. And so if you go up here to the key highlights, they kind of already said that right at the beginning of the article. I hate when they use the word Oriental, but they pretty much said Chinese stocks sold off Monday on a blanket downturn from JP Morgan. That pretty much means they talk crap about Chinese stocks and the whole market reacted. And, you know, it's never really had a strong name or reputation in the first place. And so having someone credible in the industry say something about it, not even credible, just like someone high up in the industry say something about it, does damage its reputation. But that only goes like so far. The prices that were surging today, which we're experiencing now, and a little bit of yesterday, because remember this went up yesterday and it also went up even more today. That's pretty much people reacting to, they think the news is over, because what happens with news is it travels slowly and then it has an expiration date, and then usually at that expiration date the momentum shifts because people are thinking, oh, maybe it's over. And so this article is pretty much saying, hey, it's a bad mistake that people just try to go dip by this because they think the bad news is over. The pieces here are something that you can apply into how you look at Finviz. And any one of the news that you find in the websites that, you know, pick it up from the Motley Fool and all those other like pump and dump websites, you can treat them the same way, like your catalysts, your earnings, your offering, your warrant, everything like that. They have a time to where the amount of like influence on the ticker expires, and then there's going to be a pullback, and then it's going to, like, you know, have a slight revival. People call that like all kinds of different stuff, like dead cat bounce and stuff like that, before it actually just changes the trend. Your idea is to get a first impression and then get a solid impression with some actual sense on how to, you know, put yourself in the best position to make money from that. Now, how does this all come back to Finviz? We found the starting statistics in the morning for Finviz. During the afternoon, we looked at what kind of news is related to it, and, you know, overall, how does it relate to the market by looking through the groups. You can also do the same thing through maps. And me, I like to play with the scanners a lot. So if I see something common between the volume, the change, the market cap, the sector, the industry, the country, I like to put them in each one of these filters. And then I'll make a preset of some of the ones that are similar to my patterns, or Dux's patterns, and look for specific amounts of range created. And so that's what I was trying to do when we went to the Chinese stocks, to where you'll see there's a lot of commonality between them. And if you can figure out why that's happening, you can figure out what the news is, what the catalyst is, and then the expiration date on that, and see when is the point where everything's going to shift. And then you can take that into other markets. And then the more markets or exchanges that you take it into, the more you can find the cross between all of those and find something fundamental that you can trade off of. But with that, that's pretty much how I use my Finviz. I just get an image of what's going on and I play around with what's happening on the daily. How does that relate to the weekly? And anything past that, I don't really use Finviz for. I use paid softwares like StockCraft if I'm looking for stuff like on a yearly. But the last thing I'd like to say, it would be the charts for the industries themselves. This can give you another like just quick impression of how lately energies have been positive the whole time. The rest of them are just volatile, or they're all going down, or there's really nothing to read there, and stuff like that. It's all about the trend on the long term, the slight intermediate trends, and where are you in that process, in the cycle, the market cycle. With that, that's all I pretty much have for you guys today on Finviz. So I already did the summary a little bit towards the end. So if you like what you saw, please like and subscribe, and I'll see you guys in the next video. Peace.